It's time to take a look at how markets are doing today. European stocks rebounded and oil prices fell Friday amid rising fears of a U.S. strike on Iran. For more, we can turn to Jameel Ahmad, Chief Analyst at GTC. Jameel, thanks for joining us. What are the general trends today?
Well, generally speaking, it's not just today, but this week overall, we've had a market that's struggling to find direction. And as you also pointed out, we did have some some sell-offs as well across different asset classes. Looking at global markets, I think the financial markets are now looking for a catalyst to suggest why we might have a more optimistic end to the current quarter, because of course the S&P 500 is flat for the year. Other Wall Street indices are actually, not performing well at all. For that, we're going to have to look at the U.S. interest rate story. A bit later on Wall Street today, you will have the latest U.S. PCE data. That's the preferred gauge of the U.S. central bank's inflation measure. Should it suggest that inflation has cooled in the U.S., that might open the doors for an interest rate cut sooner than June and July, and that might also support financial market stability. At the same point, as you rightly pointed out, sentiment is very closely watching what's happening in the Middle East region, and that risk aversion is also why investors don't really want to put out too much risk in their portfolios right now.
Now, we also saw that crude prices pulled back after climbing to a 6-month high this week. What's going on there?
Generally speaking, you have to look at the historical outlook for oil prices. We're still at low levels, so I can't say investors are really pricing in that something significant is going to happen in the region. Nonetheless, oil prices did move up as much as 5% before the pullback a few hours ago. That's this week. And oil prices are also up 15% this year at around $65. So investors are pricing in some geopolitical risk premium. However, there's a lot of capacity and excess supply in the market. So even if we do have an unfortunate situation unfold, there are other oil producers that will be able to fill in that supply. However, because it's geopolitics and because that region is particularly sensitive to oil and also volatile to oil-related shocks, that's why the oil markets are moving with some sensitivity.
And Jameel, all eyes are on the U.S. Supreme Court today because they may have a ruling on Trump's tariffs. So what can we expect?
We're not necessarily going to see something that's going to shift the financial market sentiment, because we know that even if the ruling does suggest that those tariffs were not, let's say, legal, the Trump administration are only going to find other ways to try and get their way around it anyway. At the same time, should they actually say that those tariffs were not legal? It might be considered somewhat market friendly because so many industries and so forth have been impacted by the tariffs. But at the end of the day, it comes down to uncertainty. When you don't have certainty in business environments, it has some role to play in how the economy unfolds. And I think that's what businesses are facing right now, just too much uncertainty, especially on policy.
Jameel, thank you so much for